Hi, I've been asked lately a little bit about capital gains taxes. So yes, if you buy a home and you sell it for more than you paid for it, you have an opportunity to pay capital gains. It's pretty simple, straightforward stuff, right? Now, there is a difference in capital gains. There's long-term and there's short-term. Short-term capital gains, if you've lived there less than a year and you sell it, or you sold it within a year of buying it, then you're taxed at whatever your income tax rate is, which could be considerably higher than capital gains tax if you've had it over a year. If you've had it over a year, then you can pay either 0, 15, or 20% of that difference toward capital gains. So you probably want to go ahead and live there a year or so. And then that depends on whether you're a single person, married, head of household, married but separate, and all the numbers change, but I can give you a rough idea. If you make less than 40 grand as a single person, or married but filing separately, then you pay 0 capital gains tax. But of course, around here, how do you buy a house and make less than 40 grand? I think most people are probably going to end up in that 15% area, so between 40, 441, 80, 500, 53 and 500, stuff like that. And then 20% is if you're making considerably more over that max, 441, 496, 500, stuff like that. So the bottom line there is it's worth it to hold on after a year so you don't have to pay your regular income tax payment. And then the only thing left is, how do you avoid it? Well, you can avoid it 3 different ways, right? You can have other losses that offset those gains. So you might have other investments where, this one you lost money on and this one you made money on, and you can make them come to 0, then you won't have to pay capital gains on that. You can also do a 1031 exchange. It eliminates capital gains for the time being, but at the end of the run, whenever that comes, you can keep doing 1031 exchanges as long as you want. But at some point, when it's all said and done, you will pay capital gains taxes. Hopefully you'll have quite a bit of money to pay that with. And then another thing you can do is you can convert your rental property, for example, into your primary residence. So as a rental property, if you go and sell it, then that's capital gains. If you've lived in it for 2 of the last 5 years, any 2 of the last 5 years, then you can realize gains of either $250,000 as an individual or $500,000 as a couple, tax-free. So yes, there are capital gains when you sell real estate. If you sell for more than you pay, there are different levels of how much you pay, and there are ways to avoid it, kind of. I hope that answered your capital gains questions.